Good morning, everybody. This is Live Trading Talk with Patrick MontesDeOca. What I would like to do here is to just simply take a look at the process that I go through here every day when I begin trading. We take a look at the latest news regarding Russia and the invasion of Ukraine, and we see that basically Ukraine is urging China to condemn Russia. More than 90% of Ukrainians believe the country will win the war. In rare rebuke, Chinese denounce Russia's war in Ukraine. So these are the headlines that are running basically the markets here for the time being. It seems that the war potentially is going to escalate as the atrocities continue by Russia invading the Ukraine and literally attacking innocent people. The problem that we're having right now in terms of the fundamentals here in the United States is the fact that this is kind of throwing the wedge, you might say, on the policies that the Feds were anticipating to apply as with regards to interest rates. And even though a quarter point was raised in the last Fed meeting that we had here, it appears that inflation is running at much, much higher levels than anticipated. The 25% was discounted in the market as we are beginning to see the effect, you might say, of this policy affecting the metals markets. It's affecting the commodities markets. One of the developments here that is occurring that has been unexpected because of this invasion of Ukraine is the fact that we are losing a great deal of grains. The area is responsible for about 30% of the world's grain production. So we've eliminated about 30% just in grains alone, wheat in particular, of the market. As we move into, you might say, this new economy, the demand in the U.S. is by far unprecedented, into inventories that we're finding are at lowest levels as a consequence of the pandemic. And now we're taking out about 30% of the world's food production out of the equation. And I don't believe that this is going to resolve itself anytime soon. Let's take a pause for a minute and digest the volatility that we have today. The metals markets here are beginning to react not only to the geopolitical crisis that we have developing deeper as a consequence of this Russian invasion, but also the commodities markets are beginning to put a lot of pressure on the inflationary factor economically around the world. And it appears that we can potentially run into a situation where we have famine in Europe developing, particularly in Europe. We're moving into the possibility that we're going to run into a shortage of food. And I don't say this lightly, and I don't use these words lightly when I'm talking to my traders here in Discord or exaggerate, but this is a development that I think is going to exacerbate the inflation factor to a large degree. It's going to accelerate the cost of food, particularly as we begin to see shortages developing in grains in particular. Crude oil is another product that is being affected tremendously by this, and we are looking at crude oil coming back up here about 1885 after testing the low end of 90, you might say, just a few days ago. And since December of last year, trading at about 70 average, we've run up to about $130 really fast. And we have reverted from here, found the bottom here and resuming the uptrend. And so I think we're going to see much, much higher prices on crude oil as well. The NASDAQ is and has gone into obviously bear territory since testing the high of 16,767. But we have reverted from that high into what appears to be a reversal pattern developing here. But we want to watch these markets very carefully and see if we're going to continue to see a follow through here, as basically the stock market indices have discounted the rate of interest rates, and the relief is that only a quarter point so far was implemented by the Feds. Same thing for the mini S&P here, where it looks like we found some kind of support here as of last week and reverted from these levels here. Let's continue to watch these markets on the developments basically that we have with interest rates, inflation, and these geopolitical risks that we are running with Russia invasion to Ukraine. But it looks like the stock market, stock indices might have priced in already the possibility and might be anticipating actually that the Feds are in a bind. They cannot raise interest rates, particularly on the face of this record debt level that is running into 30 trillion in the US alone, and the possibility that this Russia invasion can cause some kind of stagflation in the market as a consequence of this new development taking place by disrupting the supply chain once again as a consequence of the war. The market is reaching some overbought levels here on the stock indices, so we want to watch them and see if they activate any kind of a trigger point. But in the meantime, let's go back here to the gold market. For those that are joining me here, what we're looking at here is basically the standard deviation and the mean reversion levels that we run in using these pivot points. And basically what we're looking for is the extreme levels above the mean or below the mean to initiate a trade or to see if we have a trigger point developing. When the price is running or trading between the green levels, as you see in this case, between the weekly average of 1937, the daily average of 1929, it is in a neutral zone. It's 50-50 standard deviation. And ideally, what we want to trade are the extreme levels of standard deviation, which gives us a high probability trade that the price upon completion will revert back to the mean. So in the meantime, there's no signals on gold for day traders. For long-term traders, obviously keep your long-term core position, as I believe that the market is looking to test the upper end once again of this, you might say, high that was made recently of 2078. Trading above 1937 will activate the bullish price momentum for a price target of 1979 to 2037 here for the rest of this week as we take a look at the weekly numbers. The silver is pretty much in the same position as gold, except that it already has activated a bullish price momentum by trading above the weekly and the daily average of 25.33 weekly and 25.25 daily. And the targets activated daily are 25.52 to 25.91. The weekly targets, we're looking at 26.10 to 27.07 for the rest of the week. So continue to hold on to your swing or long-term core position and use these levels here, these targets, for you to decide to lock in your profits or to what to do when the market gets there. We're looking at standard deviation 50-50 for the silver and the gold market, which basically means that, particularly now for silver, it looks like we're moving into a bullish price momentum. The probabilities for a trade basically is upon testing that 25.52 or 26.10, 25.91. And right below here, you're looking at the 360-day buy one level of 25.85. If we get through that level and activate that level, we're going to pick up a lot of steam to reach the target potentially of 27.07 for the silver market. Continue to hold your swing and long position, your core long positions. Bitcoin, we basically tried to activate a bullish price momentum here on the 18th at about 12 p.m. by trading at about 42,363 and reverted right under basically to trade between the the daily average price of 41,490 and the weekly average of 40,595. We are neutral as well for Bitcoin. What I would like to do here is share with you a Roboadvisory recommendations here made by Nikki the Robot. And when you go to my website here, basically you input your password and this will give you access to all the programs that we have. And if we take a look, let's listen to the gold market report and see what it tells us for the rest of this week.
Hello everyone, this is Equity Management Academy with a weekly gold report for March 18, 2022. Summary. The weekly trend momentum of 1882 is bullish. The weekly VC PMI of 1937 is bearish price momentum. A close above 1937 stop negates this bearishness neutral. Next cycle due date April 1, 2022. If short, take profits 1880 to 1838. If long, take profits 1979 to 2037. Trading instructions. Weekly trend momentum, 1882, bullish. The gold futures contract closed at 1929. The market closing above the 9-day SMA 1882 is confirmation that the weekly trend momentum is bullish. A close below the 9 SMA would negate the weekly bullish short-term trend in neutral. Cycle. The next cycle date is due April 1, 2022. Strategy. The weekly trend momentum is bullish unless a close below 1882. Weekly price momentum, 1937, bearish. With the market closing below the VC weekly price momentum indicator at 1937, is confirmation that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish trend in neutral. Cycle. The next cycle date is due April 1, 2022. Strategy. The weekly price momentum is bearish unless a close above 1937 is activated. Weekly price indicator. Exit, longs. Sell 1, 1979. Sell 2, 2037. Exit, shorts. Buy 1, 1880. Buy 2, 1838. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 1880 to 1838, and go long on a weekly reversal stop. If long, use the 1838 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the sell 1 and 2 levels of 1979 to 2037 during the week. Cycle. The next cycle date is due April 1, 2022. Strategy. If long, take profits 1979 to 2037. If short, take profits 1880 to 1838.
Hi everyone, this is Equity Management Academy, with the weekly silver report, for March 18, 2022. Summary. The weekly trend momentum of 24.19 is bullish. The weekly VC PMI of 25.33 is bearish price momentum. A close above 25.33 stop negates this bearishness neutral. Next cycle due date is April 1, 2022. If short, take profits 24.36 to 2.59. If long, take profits 26.10 to 27.07.
Trading instructions.
Weekly trend momentum, 24.19, bullish. The silver futures contract closed at 25.09. The market closing above the 9 SMA 24.19 is confirmation that the weekly trend momentum is bullish. A close below the 9 SMA would negate the weekly bullish short-term trend to neutral. Cycle, next 144 cycle date due April 1, 2022. Strategy. The weekly trend momentum is bullish unless it closes below 24.19. Weekly price momentum, 25.33, bearish. With the market closing below the VC weekly price momentum indicator of 26.33, it confirms that the price momentum is bearish. A close above the VC weekly, it would trigger weekly stops and negate the bearish signal to neutral. Cycle. Next 144 cycle date due April 1, 2022. Strategy. The weekly price momentum is bearish unless it closes above 25.33. Weekly price indicator. Exit. Longs, sell 1, 26.10. Sell 2, 27.07. Exit. Shorts, buy 1, 24.36. Buy 2, 23.59. Look to take profits on shorts into corrections at the buy 1 and 2 levels of 24.36 to 23.59, and go long on a weekly reversal stop. If long, use the 23.59 level as a stop close only, and good till cancelled order. Look to take profits on longs as we reach the 26.10 to 27.07 levels during the week. Cycle, next 144 cycle date due April 1, 2022. Strategy. If short, take profits 24.36 to 23.59. If long, take profits 26.10 to 27.07. Hi everyone, this is Equity Management Academy, with the weekly Bitcoin report, for March 18, 2022. Summary. The weekly trend momentum of 39,657 is bullish. The weekly VC PMI of 40,595 is bullish price momentum. A close below 40,595 stop negates this bullishness neutral. Next cycle due date is April 1, 2022. If long, take profits 43,695 to 45,460. Trading instructions. Weekly trend momentum, 39,657, bullish. The contract closed at 41,779. The market closing above the 9 WSMA 39,657 is confirmation the weekly trend is bullish. A close below the 9 WSMA would negate the weekly bullish short-term trend to neutral. Cycle, the next cycle is due on April 1, 2022. Strategy. The weekly trend momentum is bullish, unless it closes below 39,657. Weekly price momentum, 40,595, bearish. With the market closing above the VC weekly price momentum indicator of 40,595, it confirms that the price momentum is bearish. A close below the VC weekly, it would negate the bullish signal to neutral. 595. Cycle, the next cycle is due on April 1, 2022. Strategy. The weekly price momentum is bullish unless it closes below 40,595. Weekly price indicator. Exit. Longs, sell 1, 43,695. Sell 2, 45,460. Exit. Shorts, buy 1, 38,830. Buy 2, 35,730. Cover short on corrections at the 38,830 to 35,730 levels and go long on a weekly reversal stop. If long, use the level as 35,730 as stop close only, and good till cancelled order. Look to take some profits on longs, as we reach the 43,695 to 45,460 levels during the week. Cycle. The next cycle date is due on April 1, 2022. Strategy. If long, take profits 43,695 to 45,460.
Welcome back, everybody. We will be opening the Discord trading room for the remainder of the day. Those that are interested here, please like and subscribe. Let us know. We'll be more than glad to send you a pass. In the meantime, my friends, if you're in the metals, stay long patiently. Your swing and core position, remain long. Look for bullish price momentum to unfold here. And look for support here as well in Bitcoin with the stock indices here basically as well, giving us an indication that the rate has been discounted and potentially we could see a reversion back up to the long side of the market. Have a great trading day, my friends here. We'll talk to you later on this afternoon during the market wrap. Have a great day.